Well, good afternoon, folks. It's time to wrap it up for May the 14th. My goodness, how time flies when you're having fun. When we left this market, we said the easiest way to play this market was a sell stop or buy stop into the market when you took out support or resistance, and you had a couple of choices. One of your choices would be the most aggressive trade would be right here, because that is near support or near resistance. We said we were looking for a move out of the middle, and when I hung up the last time, I said perhaps we have our move out of the middle right here, setting up right now, and I believe it was on this bar right here. The second way is that you break support or resistance for the day session, and here's our first break. Here's our retracement, and on this second leg right here, that little tiny skinny bar, you sell stop in the market, and you'd be short in the 86.50 area, and so far the market has traded down to, looks like 84. So there's a couple of different ways to play it. This would be the most aggressive way to play, and this would be the most conservative way to play. Obviously, you've got greater trading potential getting into a move early. But when you're looking for this move out of the middle, and we'll talk about it on the F2 screen right now, it's a pretty good play. The market has come to a balance. We talked about it needed volume in the 91.92 to break out to the upside to get to a D pattern before, and it wouldn't take a lot of volume up in here to get it to a D pattern. But we were looking for a move out of the middle, and that's what we got. On the F2 screen, it's even easier to see, and this is what we key off of. These are the splits that we do. Any move that looks like it's going to come out of the middle, I just automatically go to it and split it. Break that leg out because I do not want to fade this move. I do not want to buy against the value area low or sell against the value area high. I can get taken out. And you can see that right here, that if you had a resting buy order against the value area low, which would have been a good trade up until the market broke down. But if I had a resting limit buy right here, I would have got my head handed to me. That was a loss that I may not be able to recover from. So we have a pattern right here that if we got a little more volume, we talked about that, it would go to a D. So the easiest trade was to catch the move out of the middle and join it. Because we didn't get that volume in the 91.92, the volume held down here was B. The most likely way the market was going to break was going to be lower. And the way you find that is that you just go into the congestion areas, which would be the value area, and you look inside the value area and you go P or B, and in this case it's a B. If we would have gone and built volume up here, it could have gone either way. But it took a long time for the market to bring the sellers in, and that's where we are. So we've been talking about retesting the breakout in this area, and you usually get at least 50% into it, and that takes us to this 85 area. The breakout came at 82.50 from the other day, so on the idea that the market can sell a little bit more, we'll make the overnight buy 80 to 82, and then our 75 to 77. And 75 is a pretty major market number, and that should at least bring in short covering. On the sell side, the spill was from 88, so last rotate up is at 87, so this 86 to 88 is sell one, pretty aggressive, but I think the market may warrant that. And then our number two sell would be the 92 to 94 area. And that's it for the E-mini. But it took a long time for the trade to develop. You did have the information in your hand. We failed to build volume in 91.92, and the market did trade lower, as the structure said that it would. The financials have broken out. They are trading higher of the recent trading range. One of the reasons that we've been speculating about really for the last month is, what do these guys know that we don't know? What are they seeing that we aren't seeing? And the answer was they were looking at the fundamentals, and they weren't seeing growth returning to the economy in the second quarter. Now, we do have some news that comes out, especially on a headline basis, and especially after seasonal smoothing by the reporting agencies, that the economy was growing and really getting strong. And we had, after Yellen's testimony, Goldman Sachs coming out saying growth in the second quarter was going to be 3.9% and end up at 3% for the end of the year. Those things are being revised lower right now. But you can see where our breakout is right here on our F1 screen. Strong, it's a P. You're looking to be a buyer until the news changes. Plain and simple. Yeah, I had it, Jimmy, when I took it when the day session closed, I painted, you got it at 16. I had it at 13.5. Really strong. No doubt. This does not predict a strong economic recovery this summer. And I want to, some news service was laughing about how the reason that the consumer wasn't spending in April was that the weather was so good they're enjoying their time out of doors. Remember, going into April, the reason that the consumer wasn't spending was because the weather was so bad they couldn't get out to spend. So, I mean, it is absolutely ludicrous when you see a lot of the logic or the reasons given for higher or lower markets. It's kind of like in politics. They grasp at any straw that they can have to add a little bit of plausibility to whatever they're going to write. But market went down, we got to find a reason for it to sell. Market went up, we got to find a reason for it to buy. Okay, we got pretty good resistance up here at 24. So the easiest trade to see after, and we should expect some consolidation, would be to sell failure at 24, 28. The next place we would expect profit taking would be 31 to getting stops above the buck. So sell 2 would be 31 to 03. On the buy side, the breakout came from 14.5. It depends on what the E-mini does this last hour. If the E-mini craters, we may have to pay 21s to get in. Last rotate down in E period stopped at 17.5. L period stopped at 18.5. So I put the buy 15 to 19. Leaning against that 14.5 breakout, leaning against the last rotate down in L. That high volume number right there is at L. But like I said, if the E-mini heads lower with some momentum this afternoon, it may take 21s to get in. And then our second buy would be in the 13 to 9 area. So a rally or strength in the fundamentals makes sense to me because of the weakness in the economy, or the weakness that I see in the economy. Where all the scared money's going is the 30-year. Now, don't these guys look smart that bought the 30-year on this last auction, which was definitely undersubscribed? So the primary dealers aren't having any trouble getting that stuff off their shelves. But in the last 6 months, you can see every time we print a new high, we've got a new high in the last 6 months, and the strength that's come into this market is through the buying in the long end. So right here we are. The high is 9. Selling failure to take out 8 to 12 is the trade. If we get through 9, I mean 12, 16 would be the next band of resistance. On the buy side, the last rotate down in L period was 28. We're at 03 right now. So we'll put 29s to 25s, maybe get a little help from volatility. But if the E-mini falls out and goes through the floor, this number right here, 1, we may have to pay 1s to get in. That's a strong market. And then we'll make 17 to 21. I don't think we have a shot at our buy 2. Lots of news tomorrow. Jobless claims, 325. We get these numbers down here. Okay, jobless claims 325, CPI plus 0.3, core up 0.2. No one will pay any attention to it. Empire Manufacturing, they will pay attention to it, 4.8. Net long-term capital flow, if people are really afraid around the world, it'll jump in. But last month we did 85 billion, probably not there. Industrial production will be the #1 focus, unchanged. Capacity utilization 79.2, no one pays attention there. Philly Fed at 9.1. Housing index at 48. So #1 focus tomorrow will be industrial production, second jobless claims. Empire Manufacturing, Philly Fed, third. And then maybe the housing index. We do have natural gas inventories, but no one will pay any attention to that number. Okay, on to gold. Had a good day in gold. Not very volatile. Gold, we had a 5 to 7 sell when we started out. Did make it up to 9 plus, 1309 plus. We were hoping to buy against the buck. Did not get close. Stopped at 1302.5. So we got a B pattern. The market is holding its gains. That means long liquidation. Profit taking right here. We've got pretty substantial. Last update we showed you that the selling really does start in that 1315 area. So we got a 1285 minus, a 1315 plus. We've got a B pattern right here. That means long liquidation. So resistance is at 7 to 10. And we'll make it 13 to 15. On the buy side, we'll make it 1300 again. But we'll make it 1300, 1303. We'll favor it to the upside. Let them retest the low at 250. 95, 97 will buy 2. So we had a good day trading gold. It wasn't a really huge market, but didn't have a lot of range. Sometimes that happens in gold and crude. Looking at the euro. I think the euro is pointed lower. It is the desire of their central bank to take it lower. Draghi's rhetoric last week was questioned, and the European Central Bank had to come up and say that based on comments coming from the French Central Bank that don't count on major quantitative easing in June. We're going to help the market as we can, but nothing major. So we've got this 25 area right here is pretty good resistance, 25 to 35. And then we got a very, very clean break in the market up here pretty close to 50. Currently at 8, so we'll make 15 to 25 sell 1. And we'll make 40 to 50 sell 2. On the buy side, there's pretty good support below 37, so we'll make 36.95, 37.05. Buy 1, would like to get it closer to 95, and then 75 or better for buy 2. I think the easiest trade to see is the short, just because it's a longer term trade and that's the direction the market is pointed. The buy at 137 even was a good trade this morning, but it's a pretty aggressive trade. 36.50 is where support is. So 36.75 would put us down into that area. Okay, crude was called higher because of the unrest in the Ukraine. They're actually shooting each other again. Not major casualties. Nobody thinks that war is going to break out, but Russia is shaping the battlefield, as they say. They are maintaining a very, very strong negotiating position to get pretty much what they want out of Ukraine, and they really don't have to go to this kind of trouble, in my opinion. The low volume's at 103. Today's high was 65. We're down at 12. High volume numbers at 38. So 50 to 60, 75 will be sell 1. 103, 103 and a quarter will be sell 2. Only takes a new outbreak of shooting or fighting overnight to pull this thing back up. On the buy side, 101.75, 102 will be buy 1. Don't think we can get a big move in the overnight market, and then we're going to have 25 to 50 for buy 2. So that's all I have for today. I look forward to seeing each and every one of you at 6:45 a.m. in the main trading room. Have a great evening. It's still a little cool here, and we're not having 30 to 40 mile an hour winds out of the north. We're down to 15 to 25 mile an hour winds out of the north, and that always tends to make it a little cooler. As I still am a respiring, breathing body, and the wind can affect my temperature. Y'all have a great evening. We'll see you in the morning.